Hello, my friends. So, what is the today's topic? It is what happens to your loan when the interest rate changes. So, we will see what actually happens to your loan when the interest rate change. So, what are we talking about? See, to just introduce you to the issue, what we are talking about is that if the interest rate increase, then what will happen? What are the two possibilities that can happen? So, one is that your EMI will increase. Second thing, what can happen is that if you want to keep your EMI constant, then your tenure of the loan or the number of installment will increase. Any of these two things can happen. Either your EMI will increase once the interest rate on your loan increase, or you can go for the increment in the tenure of the loan. And any of these two things are possible. So if you are increasing the EMI with the increase in interest rate, then your tenure will remain constant. And if you go for increase in tenure, you can keep your EMI constant. So any of the two. And if the interest rate decrease, what can happen? Your EMI can decrease, keeping your tenor constant, or your tenure can decrease, keeping EMI constant, or your EMI can decrease, tenure, keeping the tenure uh, constant. Okay, so what I am saying is that any of these two things are possible. So I will put an or. So if the interest rate increases, your EMI increases, keeping the tenure constant, or your tenure increases, keeping the EMI constant. If the interest rate decreases, the EMI decreases, keeping the tenure constant, or your tenure decreases, keeping the EMI constant. So this is the basic thing that we are going to see in our Excel calculations. Okay. So, so suppose we are talking about a loan whose principal is 100,000. Okay. And uh, what is the interest rate? Interest rate, suppose, is 8%. Okay. So here are our months. Again, the tenure of the loan is 12 months. Okay. So I will first make these 12-month visible. Your opening balance is 100,000. Okay. Another thing that I will do, that what I am going to do is I will put an additional column. When you see my previous lecture, this column wasn't there, so I will put the interest column along with this on the left side of the month. So I will write down the 8% here. Okay, so this is the opening principal. What is the installment? So I have told you the formula for it is, we use the formula in Excel known as PMT. So what is the rate? So rate is for the month, it will be 8% divided by 12. So 8% divided by 12. Number of months is how many? Number of months is the number of months for which we have to calculate this EMI is what? Is how many? 12. What is the present value of the loan? That is this opening principal. Okay. And I will close the bucket. So this is my EMI. Again, I will put the minus sign so that the loan was an outflow for the bank, but the EMI is the inflow for the bank, and vice versa uh, for the bank's client or customer. We don't need the dollar sign. You can consider it or you can ignore it. No issues. Okay. What is the so what is the interest component of the EMI? So I told you how to calculate it. So what we will do is that what was the principal opening at the start of the month was this, and what will be the interest? It is 8% but divided by 12. Okay. So this is the interest component. So what will be the principal? That will be the installment minus the interest component. Okay. So, and the closing principal is the opening principal minus the principal that has been recovered in this particular EMI installment. Okay. Now, what we will do is that we will take this closing principal of the first month. At the end of the first month will be the opening principal of the second month. Okay. Now, just a minute. I will convert them all to in 2 digits form. Okay, again I can ignore the decimals also. What I will do is that I will do this, so it's better. Okay. Now now again for installment, what I will do is I will just simply drag down the formula now. But what is the thing is that dragging down the formula, so it is picking up the interest rate from here. That's not an issue, but the number of remaining payments is an issue. So what I will do is that I will also, there is another column for, I will add another column, remaining payments. Okay. So the remaining payments is 12, 11, is 1. Now I will just replace the number of payments that are remaining, to this cell. I will adjust it to this cell. Okay. Now what I can do is that I can do this. So you can see the number of payments remaining are 11, but the EMI has remained same because the opening principal has reduced. So what we will do, that we have made this amazing sheet. We will just drag them down, all of them. Just a minute. I will drag this down. Okay. I will drag this down. I will drag this down. I will drag this down. So we are ready with our this amazing repayment schedule. So you can see it's beautiful. We have a fixed rate loan. So what is currently the rate is fixed rate loan. Now we will change this loan to a variable rate loan to look into what happens to our EMI. Okay. Now suppose if I now what are the issue that we are looking at? So first what we will do is that we will increase the interest rate, then decrease the interest rate, and then see what happens, what is the impact on the EMI. Okay. So suppose after 7th month I have increased the interest rate to 10%. Suppose 10%. I have just dragged it out. So you can see what has happened. The EMI has increased. Can you see this? The EMI has increased. So if you have increased the interest rate, the EMI has increased. The tenure remains as 12 months. Okay, but the EMI has increased. Now, consequently, what you can do is that you can reduce the interest rate. Bring it down to 6. So again, what happened, that with respect to above, you can see that the EMI has reduced. So what impact the interest rate is having on your loan? The impact that it is having is, so what is the impact that we are seeing at? So our interest rate it reduced from 8% to 6%. So what happened? The EMI also. So what happened? The EMI also it reduced. It reduced from 8699 to 8642. Okay, the EMI also reduced. Now again to again we will go back. So and what happened when the interest rate increased to 10%? With respect to the earlier EMI 869, the 8699, the EMI increased to 8756. Okay, so this is what is happening. Though the tenure, what is the tenure? The tenure of the month remains as 12 months. The tenure of the month is remaining 12 months in both the cases. Okay. Now suppose what we want to do is that we want to keep our EMI constant and we want to play with the tenure. Then what will happen? Suppose I change this interest rate to 10%. So one thing what I said was that the EMI will increase, the tenure will remain constant. Suppose I want to keep the EMI as constant. Suppose I will make it 8699. 8699. 8699. Okay, 8699. So what will happen? You can see that 410 principal is still remaining. So to repay that principal, you will have to pay another EMI. So how we can how we can do that? Okay, this is 410. What is your interest component? Interest component is how this is the interest component, and principal component that you will pay is how much? 410. What installment are you going to pay? That is this 3 plus 410, and ultimately your closing principal will be 410 minus the 410. So what has happened? That you haven't increased the EMI with the increase in interest rate to 10%. Instead, what you did, you kept the EMI constant, and there was an addition of another month in your repayment schedule. Now another case that we said is that the interest rate can reduce. Okay, so if you reduce the interest rate, one thing was that your EMI reduces, your the tenure of loan remains the same. But suppose we want to keep the EMI constant, that we want to keep the EMI at the higher level of 8699. So what will happen? 8699. So if we keep the EMI at the existing level of 8699, so what will happen is in the last installment, in your last installment, this will be the interest. So in your last installment, what will happen is that you will pay this, so the closing principal. So what I want to say is that what was your earlier closing principal for the last month? It was 8641. Okay, and when we changed it to 6%, then what happened to this opening principal? This opening principal got reduced to 8599. So the same 8599, but just a minute, I haven't kept the principal constant. Just a minute. So what I will do is that I will keep the EMI constant. Sorry. So once I keep the EMI constant, what will happen is here the closing principal is 8251. The closing principal is 8251, which is much less than the earlier opening principal, earlier closing principal of the 11th month, or the earlier opening principal of the 12th month. It is much less than that. So what will happen is that in the principal component, you will recover what? You will recover this opening principal because it is less than the EMI of 8699. and you will recover the 41 interest, and your last installment will be 41 plus 8251. So it will be 8292. The last installment will be 8292. So this is what, here it is what I want to say, that if the interest rate increase, then your EMI increases, or your tenure increases. If your interest decreases, then your EMI decreases, or your tenure will decrease, or we can say even the last installment can reduce. Okay, so this is how the variable rate impacts your loan. Okay, so variable rate, we know in India there are different rate, like there is one known as, earlier there used to be base rate, even for certain loans it is there. So it gets repriced every 3 months. The interest rate change every 3 months. So whenever the base rate changes, immediately whichever loans are linked to base rate, immediately their interest rate is going to change. MCLR, the 1 year MCLR, it will get changed after 1 year. So there are loans like housing loan which are for the duration of 20 years. So in those cases, if the MCLR changes after every year, definitely the EMI can change, or their tenure can change. And third, the recent is the repo linked lending rate. Repo linked lending rate. This to every, so this is linked to repo. Repo has a chance of getting changed. The repo rate has a chance of getting changed every 2 months. So you can see that every 2 months your loan can get repriced. The EMI of your loan can change. So thanks. If there is any other issue, you can always comment in the comment section.